Hi all. Today I will explain the golden rule of the stock market. How you should trade and when you should trade. That's very important thing. When you should not trade is also one important point which I'm going to explain. Here you can see in the complete screen I have a 15-minute chart and I have a simple ICH Ikumocho settings. I have standard whatever is available in the market and pivot point and the volume. These are the things I have and RSI divergence. So as I explained briefly earlier also the same logic, it's exactly how it works. Now how it worked today, if you are out traded as per this logic. See here is the extended trend line I'm taking it up. And all you have to do is connect these peaks. These peaks are the pivot points. That's all you have to remember. Just remember you have to connect the peak. Okay, assume that market would have gone up. You should take long above this. You should take short below this. See, I'll draw the below just to be safer side. I'll draw and keep it before the market starts. I will not move these trend line for today's this thing. I'll just keep it as it is. Just to fine tune this, what we'll do is we'll go back to the 5-minute chart and see how you should take up the position. Please note this particular logic. The key factor here is that you should take a long if and only if the bullish candle breaks the trend line. See, can you see this particular thing? Only if it breaks, you should take long. Otherwise, you are not supposed to take any positions. Please remember this logic. This logic pakka works for the stock or it's for the indexes. Any other thing you want to take position, you should take long above this bullish candle. This bullish candle came at 10 o'clock. And remember one very important thing. Do not trade between 9:15 to 9:45 and 2:45 to 3:30. You should not trade. This golden rule you should always remember. If you just follow this, assume that if this particular candle would have not come, what you need to do? Search for the stock which is formed this particular logic. Otherwise, do not take the position. Now, what are the targets? As I do not use any Elliott wave, any Fibonacci series, nothing is needed. All you have to do is see R1, R2, R3, R4. See, I'll just deselect the historical data so that your clarity will be there in the display kind of a thing. See, it opened up at somewhere between R1 and R2. You have taken up the position at R2. It is touched the target of R5. It is somewhere between a value between 17,515 to 17,600. It's almost close to 645. In fact, if you see this, more than 150 points target it has come. So follow the three guidelines which will repeat. Golden rule number one, no trade between 9:15 to 9:45. Golden rule number two, no trade between 2:45 to 3:30. You should take a long if the candle breaks above the trend line with a bullish candle. You should take a short if the candle breaks below the trend line. No question of touching or modification of these trend line for the day. And whenever it touches R1, R2, keep watching. Is it forming one more bullish candle so that R3 is reached, R4 is reached, R5 is reached. That's all the simple logic. You follow it. Your calls will be accurate. You will not lose the money. The key point is you should not trade, keep one or the other position. No, such thing is not allowed. You should take up the position only when it happens. You keep searching for if the things don't work for the index, search for the stock. Whether Nifty is working, Bank Nifty is working, Reliance is working, HDFC is working, or something like that. So just follow this guideline, it will work. Otherwise, option two is just in the Ikumocho chart, if the candle breaks below the conversion line, the profit. That's all. Other option. Otherwise, just follow the pivot point. That is sufficient to. Thank you very much.